What if the world you live in, the prices you pay, the wealth you build, the freedom you think you have, is not controlled by governments, markets, or even the money in your pocket? What if the real power is hidden inside a blueprint designed more than a century ago, a blueprint built on debt, enforced by interest, and perfected by institutions you never voted for? A blueprint that allowed a small group of financial architects to turn something completely worthless into the most powerful empire in human history. And here's the part no one ever asks: if debt is a burden, why does every powerful nation chase more of it? Why does the global financial system depend on something that should have collapsed long ago? And how did debt, an idea older than coins, evolve into the central engine that runs the entire world? Today we're pulling the curtain back. This is the hidden debt blueprint behind a global money empire. And once you understand it, you will never look at money, banking, or national prosperity the same way again. Before we begin, forget everything you've heard about debt being just borrowing. Debt at the sovereign level is not financial housekeeping. It is a weapon, a technology, a political tool, and a silent infrastructure controlling world power. Governments claim they borrow to stimulate economies. Banks say debt creates opportunity. Economists repeat that debt is necessary for growth. But buried beneath these polite explanations is a far older truth. Debt is control. Debt is leverage. Debt is empire. The story doesn't begin with modern banks or Wall Street or the Federal Reserve. It starts thousands of years ago in ancient kingdoms, temples, and courts, where elites first discovered a dark secret: people obey the things they owe. In Mesopotamia, around 3000 BCE, the world's first large-scale economy ran on clay tablets, debt records etched into stone-like slabs. These weren't simple notes. They were the backbone of society. Temples lent grain to farmers. Farmers owed harvests back. Elites controlled labor. Labor built cities. Cities became states. Debt wasn't a product. It was the operating system. And when people became so indebted that society began breaking apart, kings issued jubilees to reset the system without dismantling the structure of power. The blueprint was being written. Centuries later, Rome perfected it. Rome didn't dominate through gold alone. It dominated through credit. Provinces paid taxes. Merchants borrowed to trade. Soldiers were compensated through debt systems. And when a region fell behind on taxes, Rome didn't always punish them, it absorbed them. Debt became political submission. A population in debt is predictable. State in debt is inflexible. And Rome's collapse came not when its enemies arrived at the gates, but when its credit system imploded under its own weight. A pattern history would repeat as time moved on. Feudal Europe, merchant families, early bankers experimented with one dangerous idea: money does not need to be created, it can simply be issued as debt. But the real turning point came in 1694, when a desperate England created the Bank of England. Private lenders offered the government money in exchange for the right to issue banknotes backed by that loan. For the first time, government debt became national money. This single moment changed the world forever. Alchemy didn't turn lead into gold, it turned debt into currency. More countries copied the model: France, Germany, Russia, Japan. And finally, in 1913, in a quiet holiday session, the United States established the Federal Reserve, a hybrid institution responsible for controlling the entire supply of U.S. money and managing national debt. The public didn't understand it, but insiders knew this was the foundation of a global financial empire. Then came 1971, the day money stopped being real. When the U.S. abandoned the gold standard, money detached from any physical anchor. It became pure debt numbers, promises, entries, and ledgers. Governments could print endlessly. Banks could lend endlessly. Consumers could borrow endlessly. The system became a loop: debt creates money, and money creates more debt. From the 1980s onward, global debt exploded because the system demanded it. Without constant borrowing, economies stall, businesses fail, governments fall, and markets collapse. Debt became the oxygen of modern prosperity: essential, invisible, and addictive. Central banks invented new tools to keep the system alive: quantitative easing, zero interest rates, negative interest rates, bailouts, emergency liquidity, bond buying, and unlimited balance sheet expansion. These weren't solutions, they were patches on a leaking ship. Meanwhile, behind the scenes, powerful financial architects refined the blueprint. The Rothschilds mastered information and credit networks. Influencing nations simply by lending them money, J.P. Morgan demonstrated that one banker could stabilize an entire collapsing system, leading to the creation of the Federal Reserve. Keynes provided the ideology of endless government borrowing. Friedman deregulated and opened the floodgates of private credit. Together, their ideas became the intellectual armor of the debt empire. Then came the most important institutions of all, the IMF, the World Bank, and the Bank for International Settlements. The IMF became the global enforcer, lending money in crises, but demanding painful austerity. The World Bank became the developer, funding projects through debt that countries often couldn't repay. BIS became the central bank of central banks, setting global rules from behind closed doors, beyond political oversight. The blueprint was no longer national, it was global. As digital money arrived, the blueprint evolved into something faster, sharper, more powerful than ever before. Money was no longer physical, it was a number in a database, a digital claim backed by nothing but belief. Cashless societies made control frictionless. And then came CBDCs, programmable, trackable, restrictable money controlled directly by central banks. Money could now be monitored, limited, or frozen with a keystroke. The entire global economy became a pyramid of dependency. At the bottom are consumers, borrowing to live. Above them are businesses, borrowing to grow. Above them are governments, borrowing to rule. And at the top are central banks and institutions that issue the credit, write the rules, and control the supply. The system cannot reverse, it cannot shrink, it cannot stop. It must expand, or it collapses. So inflation was built into the system, the silent tax that erodes savings, pushes people to work harder, and makes government debt easier to repay. Inflation punishes savers and rewards borrowers, protects governments and fuels the machine, shapes behavior through fear, pushing people to spend before prices rise further. Meanwhile, the system leverages psychology. People are taught to accept debt as normal, even necessary. You borrow for school, borrow for a home, borrow for emergencies, borrow for life. Debt becomes the prerequisite for participation in society. Today, the blueprint faces its greatest challenge. Debt is spiraling, trust is weakening, currencies are unstable, institutions are strained, nations are diverging. The dollar's monopoly is eroding and digital surveillance is rising. The system is shifting from debt-driven prosperity to debt-driven survival. But the most important truth is this: the global financial empire does not survive because of math. It survives because of belief. Belief in money, belief in credit, belief in tomorrow. The moment people stop believing, the blueprint collapses. You've now walked through 5,000 years of hidden financial architecture, from clay tablets to digital ledgers, from empires built on tax records to nations built on balance sheets, and the next chapter is already unfolding. If this opened your eyes, if it helped you see the world differently, then stay curious, stay aware, and keep questioning the systems you were taught never to question. Like this video, share it, subscribe for more deep investigations, because the blueprint is still expanding, and the next chapter has already begun.